By the time yesterday's US interest rate decision was due, markets were firmly expecting that rates would be increased by 75 basis points. But perhaps other things you should be aware of. The July meeting is going to see another hike of between 50 to 75 basis points again. I think most likely at this stage it's going to be a further 75 basis points. It seems it was the alarming University of Michigan inflation expectations reading, which was a deciding factor in yesterday's decision. There we'd seen 5-year inflation expectations hit their highest level since 2008. No, the Fed wants a restrictive policy by the end of the year and are going to tighten financial conditions until there's clear evidence of inflation coming down. And in their view, there'll need to be several months of compelling evidence of falling inflation to signal its job done. Now, what the neutral level of interest rates are, i.e. the rate which is neither restrictive nor stimulative, can't be definitively known, but it's likely to be the mid 2% range. As of this morning, so 16th of June, markets expect US interest rates to end 2022 at 3.7%. A month ago, rates at the end of this year were expected to be just 2.7%. At the start of this year, rates were expected to be just 0.8% at the end of 2022. So obviously quite a jump. The Fed dot plot, which sets out individual policymakers' expectations for rates, suggests rates were going to rise to 3.4% by the end of this year, peak at 3.8%, but then fall to 3.4% in 2024, suggesting the Fed will eventually reverse course given a slowing economy. We also need to remember, the labour market's still very strong. There's still a high level of job openings, and according to the Fed's projections, unemployment is expected to rise to 4.1% in 2024. It currently stands at 3.6%. The Fed don't want to cause a recession, but they've got a difficult job to achieve a slowdown or a soft landing where demand kind of falls to match supply but doesn't induce a recession. And the Fed admit that their task isn't getting any easier. In terms of their other updated economic projections, GDP growth is forecast to be 1.7% by the end of this year and stay at this level through to 2024. In March, they predicted the economy would expand at 2%. Core inflation, which again is the key metric, is expected to fall to 4.3% this year and then 2.7% in 2023. In terms of other economic data, just to keep an eye on, actually the Atlanta's Fed GDP Now tracker, which is an estimate of current growth in the economy, has now fallen to 0. We did see US Treasuries and equity markets initially respond positively. That was more to the hope that the Fed will raise rates and dampen inflation without crimping growth, and that 75 basis points increases would be relatively uncommon. That positive view may not last long. We're seeing Fed futures turn quite sharply south today, and I think we can expect to see further volatility in the near term. Hopefully these comments are of use. As ever, if you need anything further, please don't hesitate to get in contact. Thank you very much.